Welcome to the Motley Fool's Crunch Time series, where we scout out a single company from their story to their opportunities and risks. Today I'm going to be covering Alphabet, owner of Google, and I'm going to start with my prediction. I think Alphabet is going to beat the market over the next 5 years. And it's not just about the company's products, it's about the value that investors are getting in shares today. Let's get started with the business strategy. Alphabet is a technology company creating a search engine, email products, YouTube, all the things that you probably interact with every day. But the business is about advertising. Advertisers pay for placement on Google's products. You can see in this chart that this is a massive business and it has started to accelerate just over the last few quarters. Now, $257 billion per year in revenue from search, Google Network, and YouTube ads. To pair with that advertising business, Alphabet has a huge hardware and platform business, $39.5 billion in revenue from subscriptions, platforms, and devices. That's going to include everything from their Pixel phone to Android to the Play Store and G Suite. So these are platforms that the company is building and they can sell them to billions of users around the world. That's the scale advantage that Alphabet has. But the biggest growth opportunity, I think, is in the cloud. Google Cloud actually runs Google's main infrastructure. And now customers can license that infrastructure, like data centers and other infrastructure throughout the world, to build their own applications and cloud services. This includes AI. This is something Apple did to develop its artificial intelligence models. That was built on Google's TPUs. This is now more than a $40 billion business over the past year, and it's also profitable. $4.9 billion in operating income from Google Cloud, and those margins are going up. Not only do you have revenue growth from Google Cloud, you actually have profit growth and margin expansion. On top of all of these products that you know, Alphabet is the leader in autonomous driving today with Waymo. Now, that's a very small business for the company, but 10 years from now, it may be a meaningful contributor to its revenue, may also be spun off. But of course, there are risks like there are with any company. Competition is always a risk, and that has gotten more acute with artificial intelligence. AI companies like Perplexity, ChatGPT are coming after Google's search business. If they are successful, that will impact the company's revenue and profitability long term. Regulations are also a risk. Regulators are trying to break up Alphabet. So as investors, we have to understand and accept those risks. Now, I think the value in Alphabet stock outweighs any risks that investors face. And that's why my prediction is that this is going to beat the market no matter whether the company is broken up or not. And a big reason I think that is just the value that investors are getting today. Alphabet's price to earnings multiple is only 24 on a trailing 12-month basis and just 21 on a forward-looking basis. The company is buying back shares, continues to grow at double digits, and I don't think there's anything that's going to stop that momentum. If you can grow for double digits over 5 to 10 years, that should be a market-beating investment. And the growth that I talked about earlier from the cloud and Waymo are just icing on the cake. So to recap, Alphabet is the best value in big tech today. Its growth is accelerating in advertising, and there is a lot of future growth ahead with the cloud and Waymo. That's what will help it drive market-beating returns. Now, with the Motley Fool, your comments make us all smarter. So please comment with your own research and insights and tell us what stock you want to see on Crunch Time. And don't forget to check out fool.com/invest to get the top 10 stocks to buy now. Thanks for watching, everybody, and we'll see you here next time.